Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Monday, the 11th of May. Apologies once again, we're overloaded with bullish situations, difficult to decide which ones to pick on, which ones to avoid. And obviously the ones you avoid tend to be the ones that move the most. But anyway, charting interest provided initially by Eddie Stobart today. Interesting that we've had a narrow bear trap from below those previous lows in February, March, under 5 pence, with the view being that while we're above 5 pence, at the top of the range, at least towards the 10 pence level, initially the 50-day moving average 8.9 pence could be on the cards. Obviously, the fundamentals are in this situation as well, so it's not all about the charting. But the reason for highlighting the stock today is that initial bear trap. I think the low was around 4.25 pence at the start of trading. On to a bit of a lap of honour situation. Hemogenics, although it has to be said that the shares are still maintaining the 7 to 11 pence range that was highlighted before that last drop. We actually went down to around 5.34 on Friday, but 11 pence the peak so far today, and an end of day close above 11 pence needed in order to trigger a possible new move to the upside and a top of April trend channel target up towards 19 or even 20 pence. Next situation, it's good to see gold stock doing well, given the way that the gold price really has actually disappointed, given the trillions put into trying to save world economies. Situation here is we've got a vertical move here to the upside through the 200-day moving average for Galantis Gold. End of day close above 21.88, and the 200-day line could point the shares up to the top of that broadening triangle from the end of October as high as 40 pence, also closing out that gap to the downside from October as well. Also interesting to see how we've got a golden cross there between the 20 and 50-day moving averages, which provides a bit of at least psychological support on this situation. Another vertical move to the upside coming in the form of Galileo Resources. Really strong price action there. Really started with the move at the beginning of May, first session there. Closing above 0.6 was the big technical trigger there, big charting trigger, and we were calling on the 2 pence level as a potential near-term target here last week, and that looks as though that is still on the cards there. Obviously, the initial resistance there from the middle of 2018 around 1.5 pence, but 2 pence, the big number there, at least while we hold above the 0.8 pence area, which was or has been support on the way up so far this month. On to a stock which has got some people rather excited this morning. Well, it's not a new name, but certainly in the near term we've had an interesting ride in terms of the charting at Mosman Oil and Gas. You can see that the stock has broken up through the 50-day moving average at 0.06 pence. That leaves us looking to where the stock may be headed over the near term, probably up towards the 200-day line and the top of a rising trend channel. From the middle of February would be the obvious destination, and that target valid while we hold above the mid-April resistance at 0.66 pence, and effectively above while we stay above the 50-day line at 0.06 pence. So let's see if the stock can deliver on that setup. One of the recent rises, which gave us quite an astronomical move to the upside, was Motif Bio. Current situation here is that we've retraced from the peaks around 1.8 pence last week, and currently hovering either side of the 200-day moving average at 0.83 pence, which is good. Also hovering either side of the initial April resistance at 0.84, so old resistance becoming new support with a bit of an overlap. End of day close above the 200-day line today could be the start of a process which takes the shares up to retest the 1.8 pence area over the next few weeks. So certainly something to look out for. only back below the recent emerging bull flag at 0.6 pence, really killing the idea that this is a mid-move consolidation ahead of a move to the upside. Requested stock comes here in the form of Myriad. Here you can see that the shares broken that trend line there from January. Did that a few days ago, actually, around the 9 pence level, 9.5 pence level. While we're above that, looking for a retest of late January resistance around 16, 17 pence. Best case scenario here over by the end of next month up to 22 or 23 pence, which is the top of a rising trend channel from January on that particular situation. Stock which has kept on, which has been probably one of the most reliable plays in the recent past. Slow burn to the upside for Open Orphan. The fun and games really started here with the break of that July resistance at 8 pence. Last month we traded between 7 and 9 pence, but broken out quite nicely now with a gap to the upside. Today had a gap. This is a second gap now in the recent push higher for the shares. Came just shy of the previous target here around 14 pence, and so we're looking for what may be the next leg to the upside. At this stage, the best call probably towards 22, 23 pence, that resistance line there from July last year, and that target valid while we hold above the 10 pence level at the moment, which is the initial May resistance. But 22, 23 pence is a valid looking target there, and quite a pleasant surprise given the way that it's taken probably longer than many hope for the shares to break out and start galloping as they are. Interesting news today from Sanlion Energy with the direct purchase of £20 million worth of shares. Not surprisingly, there's been a gap to the upside for the stock. We've held the 50-day moving average and gap through the 20-day line at 22 pence. At least while we're above the 20-day line, holding the latest gap. The minimum on the upside likely to be up to 30 pence, which is post-April resistance. As far as what the bigger target may be here, looking towards the 40 pence zone, which is the top of a rising trend channel from September last year. Finishing off with a stock which for some strange reason started to move a little on Friday. It's followed through reluctantly today on the upside with the RNS that the company's released. We have a broadening triangle here from October last year on the Volga Gas daily chart, and at least while we're above the mid-April resistance at 26 pence, now becoming new support. The target here as high as 50 pence is a best case scenario, and that's despite the way that we've retreated from a bull trap so far this morning above the 200-day line, but above 26 pence, looking for as much as 50 pence on that situation. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.